I used an ICT concept known as the fair value gap or an imbalance to catch this insane move on gold. So guys, before I put on my annotations to show you guys what I was looking at and how I caught that beautiful move on gold, every now and then I get a comment from one of these ICT followers saying, oh, that's an ICT concept, that's an ICT concept. No one's saying that this is my concept. I did not create this concept. This is ICT's concept. I'm grateful that this has been shared and I have an understanding of the concept and I use it with my trading style. So shout out to ICT for dropping this knowledge. Now I'm going to show you guys how I use that concept of fair value gaps or imbalances to actually catch this move. Okay, so guys, my annotations are on. I'm going to quickly zoom out just a little bit. You can see that this was a new week. This was the week of the 30th of October. And as you guys can see, price was moving sideways for a bit. Eventually, we ran the buy side liquidity and then we went forth and took the sell side liquidity. I was looking at price to retrace and I was looking at price to retrace into where? Into something within a premium that could cause price to turn around. And so what I identified from this very highest point to this lowest point over here, so let's quickly show you guys what I mean by it was in a premium, was that from this very highest point to this lowest point over here, anything above this 50% line is at a premium. And the higher you go, the more it is in a premium. And so, like I said, I was looking for a point of interest within a premium price. And I was buying from down here, but that's another story. And so what I was looking at was this. I had identified a imbalance right here. This is an area of inefficiency or a fair value gap. And so if I just zoom in a little bit, you can see from this kind of 6-week low and that one's high, they don't touch each other. And it just shows you that only sell side was offered to the market. And so in other words, there's uneven trading here. And so price would need to come back up here to balance out that area to provide buy side to here. And so this was going to be my draw on price from this kind of 6-week low to that one's high. I'm going to expand it all the way to the right. There we go. And this was my imbalance. Don't forget, this is a new day. I'm looking for price to trade up into this area of inefficiency before looking to get my sell. So now I'm going to go down the time frame. Let's go to the 1 minute time frame. This is that imbalance over here. You can see price trades into that area of inefficiency. It doesn't trade into the full thing. It just taps into this area and then it trades back lower beneath this low and then it continues to run lower. So my very first opportunity was going to come from when price traded into this area of inefficiency. They did tap into it just a little bit, but I wanted them to tap into it a little bit more. And so I took my very first sell, but I saw price filling in this imbalance. So I actually took the sell from this candlestick here when it was pushing down and I put my stop loss above the high. You guys know I give myself 2 to 3 opportunities to catch the move. And so I caught it there. And as you guys can see, look, it came up to stop me out. That was a stop out. That was a negative 1% right there. So now let's move on to what happened next. Then price did this. Price traded higher above this high, deeper into this inefficiency. And then what did I see? I saw this up close candle now. This up close candle from this kind of 6-week low to that one's high. So let's quickly mark it up. We saw this up close candle. Price then traded beneath the low of that up close candle, retraced back up and then dropped again. So this is where I was going to be happy to jump in with this trade. Once again, they had an area of inefficiency over here. So I'm going to go ahead and mark the imbalance or the fair value gap over here. So this is my imbalance. If you want to go real deep into fair value gaps, then go ahead and watch all of ICT's videos because he goes in on, you know, all kinds of stuff. And now check it out. Look at that imbalance over here again, or a fair value gap. Price trades into this fair value gap. This is where I catch my next trade on gold. I sell it from here. Put my stop loss above the high over here. So let's just quickly show you what we're doing right here. So this was my short position. So roughly about thereabouts the low of the imbalance. I put my stop loss at the high over there and I targeted this same low. I targeted just a bit lower than that, actually, just a bit lower than that. And the reason I targeted this low is because there was liquidity here. People think this is some kind of double bottom over here. And so there's going to be money here. And so this is why I was targeting this low over here. I'm going to go up to the 5 minute time frame to show you guys how this actually played out real quick. Hit play. Oh, let's just pause it. So you guys saw, literally, let's bring it back just a little bit. Let's take it all the way down to here. So guys, we use the main imbalance. That was going to be our point of interest. And then I had to go down into a lower time frame, the 1 minute time frame. Looked about the imbalance on the lower time frame to catch this entry to then run it to the bottom side. And as you guys saw, price shoot to the downside. Let's quickly expand this out. There we go. Price shoot to the downside. It didn't take that long. Let's just double check to see how long it took. This took roughly about 45 minutes for this to happen. Literally, that's a scalp. That's a scalp right there. You guys can call that a scalp. And then altogether, this was roughly about a 1 to 8 hour trade. It was a beautiful trade, absolutely phenomenal trade. This one loss didn't phase me. I know there's lots of you out there that when you take one loss, you're scared to get into the next trade. I keep it very simple. I could have been panicking. I could have been stressing that I lost the very first trade. It never went in my favor and all of this. I could have been panicking and missed this trade. But what I decided to do was I decided to be patient and wait for price to show me that it wants to break down. When price created this up close candle and traded beneath that, I didn't catch this trade for various different different reasons. But what I was able to do was I was able to see the low risk setup. And so look at this, from this candlestick's high to that one's low. That's our very first up close candle. We have another one here from this candlestick's high and low. This is our second up close candle. And if you guys watched my video on low risk setup, this is the safer option to go for. It doesn't always provide you with one. If it does provide you with one, then it's highly likely that price should move in your favor. And so when price traded up into that up close candle, this is when I was very confident with this trade, put my stop loss above the last up, and then boom. Anyway, guys, let's go to the executions. I'm gonna go up to the 15-minute time frame just so you can see. There we go. There we go. I'm gonna cancel out this replay mode as well. Okay, guys, so I'm out of that replay mode right now. I want to go ahead and put my executions on right now. There we go. Boom. So here are my executions. You can see this was my very first trade, like I said, playing off of this institutional candle. Stop loss above the high, and it took me out. This was my second trade that I took now. So you can see here, I know because of this candlestick, it just makes everything look awkward here. But you can see here, this is why I entered when price, let's go to the 1 minute time frame. You see it a lot better. Price traded up into this inefficiency. This is why I jumped in right at the lowest point of that fair value gap, and then price then smashed TP. When I hover over this arrow over here, you can see there's a blue arrow above it, and then this is why I hit TP.